Hi everyone, let's have a look at my preferred and alternative Elliott Wave scenarios on Bitcoin, but starting with simply looking at this range over here. I pulled a volume profile from the high that we made at 31K to the end of the price action where we are right now. And you can see that if we look at this volume profile, we have basically been ranging to the up and the downside of this volume profile. But what is interesting is sometimes you have these type of moves where price is going above or below the value area high or the value area low. And then once it gets respected inside the value area once again of this volume profile, it tends to go to the other side of the range. So one can expect that if this move over here gets back into the value area low of this range, that we continue pushing to the value area high, which is sitting at 29.8K. Now this would also match with the scenario that I have on the medium time frame, which is preferred, where I'm looking for this to be a wave A, then we have a three-wave structure in a wave B before then continuation to the downside in a wave C. So after ranging here at the lows, maybe going down once more to take the triple bottom, but eventually getting back into that value area low of the range, move to the upside to the high of this range, take the triple top for a bit of liquidity before then moving to the downside. Now the Elliott Wave pattern that we are then looking for is a zigzag, which then is a 5, 3, and then another impulsive move to the downside in a 5, where I have two target boxes here below the current price section. The first one is between 24,850 to 24.3K, and the second one is between 22.6K and 21.8K for potential targets to the downside as well. Now, as it stands right now, price is bouncing in the target area that we already have for a while, which is the white box between 27.6K and 27.2K, which includes a weekly, a triple bottom, also the range value area low of this whole range. So it's a little bit of a bigger pool that I've done previously. And we have some CVD divergences between the low of A over here and the higher low that is created. So we have a higher low on price, lower low on the CVD, bullish divergence, and the target for a bullish divergence is the high over here at 30K. So that could be quite interesting of a scenario, everything coming together for then looking for a little bit more upside. And what also is interesting for a little bit more upside is a fake out of the triangle. So the first thing people learn usually is pulling trend lines and looking for patterns. Now, if you pull two trend lines and you look at the pattern, you see a triangle. So then we have to ask ourselves what makes most people lose. Well, we have the breakout traders going short here, putting their stop loss in the triangle, and they are looking for downside. You have very likely many people shorting in this range over here, putting their stop losses above the triple top that we have over there. So what makes most people lose? Would that be continuing to the downside, or would that be moving to the upside? Well, in my opinion, it would be a move to the upside. Stop out the triangle breakout traders, stop out the people that put their stop losses above here. So basically moving to the upside, grab the liquidity, and then moving to the downside. I think that would be very nice. Of course, price could go down and grab the liquidity at the lows, because we do have some liquidity here of a triple bottom, but then eventually continuing to the upside. And I have to say, by the way, that usually if the 886 is hit, because the red line that you see over here is actually the 886, which is pulled from the low to the high. Usually with an 886, I prefer to hit it once before continuing to the upside instead of hitting it twice before continuing. But of course, you know, that's a preference. I don't control price, as no one does, I suppose. And then the bullish scenario, which is an alternative scenario, is that this was a correction in an ABC, which is already finished, and we are now looking at an impulsive structure to the upside, where this is then a wave 1, looking for a three-wave structure in a wave 2, bouncing on the 886 with the bullish divergences for eventually a much bigger move to the upside for a wave 3. Now again, this is an alternative, and currently this is my preferred scenario, where I look for resistance in this area at wave B, which is between 30K and 31K. If we then go to the low time frame scenarios on the Bitcoin price with Elliott Waves, I'm looking at this being a three-wave structure, either an ABC like that, or this B moves one high to the right over there, which makes this then a complex correction in a WXY, or an ABC, but then this wave C is actually reaching the 0.618, which is a rare target, but more about that on the very low time frame. But then at least we have an ABC over here, which then is a 5-3-5 wave move. So over here in a wave A, we then have a extended fifth wave, if you count this on the lower time frame, and here we have a 5-wave structure in this wave C. So basically in this scenario, we say, hey, this move is already finished and we are looking for that move to the upside right now. The most common target area for a wave C has been so far very nicely respected. It's between the 1 and the 1.236 trend-based fib extension taken from the high of A to the low of A to then the high of this wave B. So far so good indeed, and then after this move to the downside, wave C is in looking for upside. So this is actually quite a nice scenario, and when I look at the medium time frame scenario that we have going on, I still prefer this being a three-wave structure. It just works best actually in this three-wave count that I have, but we are ranging here for a long time. So if price would fall once more, then this being an ABC is kind of invalidated for me. So the invalidation would be if price is taking this low, because then I am more looking into this scenario over here where this is then a 5-wave move to the downside. So then a 1, 2, 3, 4, 5-wave move to the downside, in this then being an ABC. Now the reason why this is still an alternative scenario is because if this is an ABC and basically one structure and then a wave Y, it basically means that we need a three-wave structure in a wave X. That works. But then this is wave W, and this being a wave W, you can see it's incredibly short in time. It's very, very steep to the downside, and this W is very short. X is a lot longer than W, and then this wave Y is a lot longer than both X and W. So it doesn't really look good, if you know what I mean. And Elliott Waves is also about the look sometimes. So yeah, this is not a necessarily preferred scenario, but if price would dip to the downside once more and take this low, then this is definitely a scenario I have in my mind where this is then a 1, 2, 3. This is a wave 4 looking for 5 to then grab the liquidity of this triple bottom for then a move to the upside once again. And the final scenario, or actually not scenario, but this is the explanation of the impulse, sorry. So this is basically, we have this scenario with a 5-wave move to the downside, but this is basically zooming into the impulse that we then have, where this is then a wave 1, wave 2, wave 3, looking for 4 and 5. Couple of reasons, by the way, that this is an alternative. First, let's pull a fib from the high to the low of 2, reach the 0.5, which is absolutely fine for a wave 2. However, this wave 3 over here did not reach one of the most common targets, or actually usually the minimum target for a wave 3, which is the 1.618. which sits over here in green. You can see it's far below the low of this wave 3 over here. Now, a minimum requirement for a wave 3 is that it cannot be the shortest wave, and it is longer than wave 1, as you can see, but it also didn't reach the most common target and also usually minimum target for wave 3, which is the 1.618. So that is definitely something to take into account when thinking about this as an impulsive structure. But if we have it as a scenario in our Elliott Waves, right, then the high of 4 is likely to be in already, or hitting the daily naked point of control at 27,950 for resistance, also in confluence with the 382 before a move down for then the triple bottom. And yeah, we also have news coming up, so then maybe the low of this wave 5 might be made during the news. And if I quickly open the news for you as well, then you can see that today, 2:30 p.m. Central East European time, you got to check your own time zone for this one, we have some high impact news coming, which can create some volatility. Of course, it can either go to the upside or the downside. We do not know, no one knows, but make sure you trade safe and yeah, have everything in place to interact with the news and the potential volatility. Wave 5 might come in with the volatility, or it can be a bigger push, of course, to the upside during the volatility. We have no idea. We have to wait and see, but it's at least good to put it on your chart. Like I always do it like this, vertical line with an alarm. So the moment the alarm hits, I know, okay, you know, news is coming. I get an alarm as well because the alarm is called news. So yeah, I do it like this. If we then look at the lows over here, then we have a couple of scenarios, both bearish and bullish. These first two bearish ones. So this is then a WXY, with this being a zigzag in a W. Then we have a complex correction in a wave X, before then another ABC over here in a wave Y. So this is then a complex correction, after which we then expect downside, right? So that is the goal of this scenario basically, is hey, the high of this correction is in, and we are now expecting a move to the downside to grab these lows over here, but more importantly to grab the triple low that we have over there at 27.2k. The other scenario is that this is an ABC, which is a 5-wave structure. Then we have a 3-wave WXY before another 5-wave structure, reaching then that daily naked point of control that we have at 27.950. So that is then an important target for this wave C before then again continuing to the downside in this particular scenario. Now if I look at the length of this range over here, because what we're basically looking at is this now being a wave 4 and then a 1, 2, 3, 4, 5. Now if this is a wave 4 in comparison with this being a wave 2, wave 4 at the moment is just a little bit longer than this wave 2 right now. So if I pull a fib time, you can see that the range now is longer than wave 2, which is nice because wave 4s tend to be longer than wave 2s, and it's shorter than the 1.618 compared to wave 2, which is nice as well. And then the high is made in the middle. So yeah, it would be quite nice if this is then the high of a wave 4 for then moving to the downside. But then again, as mentioned, I'm not sure on the low time frame and medium time frame if I would like another move to the downside from an Elliott Wave perspective before going up or just moving to the upside. But so far, this range over here looks more corrective than impulsive, I suppose. If you then do look at the impulsive structure, I mean, we are making higher lows and higher highs, I suppose, from a market structure point of view. But this is then a wave 1 in a 1, 2, 3, 4, 5 wave move over here. Followed then by a 3-wave correction in this being a wave 2, and then either this is another 1, 2, 1, 2 before continuation, or this is still part of a bigger correction. So the question is this the end of wave 2? Or is the end of wave 2 then still coming? Now this retraced to the 786, as you can see, price retraced to the 786, which is a good target for a wave 2, like the golden pocket and the 786. These are common targets for a wave 2, so that's absolutely fine. The 886, however, is a rare target for a wave 2. So if price would go to the downside once more and take this low, it's very likely it's going to hit the red line, the 886, and that also makes this being a wave 2 a little bit less likely, because the 886 is a rare target for a wave 2, but a common target for a wave B or a wave X. So that is something to take into account. But in this scenario, we simply expect upside, right? Either up now or up later. We do not expect this low to be taken, which of course this low, as you remember, is sitting on the 886 on the medium time frame, right? So we basically expect a bounce from the 886 to the upside. We also had bullish divergences very locally, by the way. So if I zoom out over here, this is the range on the low time frame on the micro. And we had a bullish divergence between this low over here, a higher low created, but both on the yellow as well as the blue line, we had lower lows. So that was a bullish divergence, but this one already played out as price has took that high over there. So the bullish divergence played out, which means we're now neutral, but we did have for then at least a short moment, a double bullish divergence. And I usually like those scenarios where you have a bullish divergence on the medium time frame over here, where the target is then, as mentioned, 30K. But then locally over here, you also had another bullish divergence, which I like to call a double bullish divergence, a bullish divergence on the higher time frame and a bullish divergence more locally. So my preferred scenario on the micro, I mean, it's twofold. The bearish scenario that I prefer is basically the high that is then already in, and we are looking for a downside. So if this high gets taken once again right now, before going down first, I might start to favor the bullish scenario more. So the more bearish scenario that I prefer is the high in, and we're looking for a downside. And the bullish scenario, well, I only have one, which is this being a 1, 2, and then eventually looking for upside to come. So if we take this high, this scenario might start to become more likely. So I hope this video was helpful or valuable to you. Please check out the macro and the high time frame video if you're interested. And for now, thanks for watching and subscribing, and I will see you at the next one. Bye bye.